All right, let's go ahead and break down this Friday recap, guys, for you. And go ahead and just like and subscribe for us and share this with your friends. Our goal is to get everybody on the ability to create that financial freedom for themselves, be able to learn how to take their financial wants and desires and put them into action and be able to do that for yourself and not give it to somebody else to take care of for you. Because in the end, I'm sure everybody right now is being told to put money in bonds. If you have a financial advisor, I'm sure that's probably one of the places they're putting it. But hey, we're not a financial advisor. We're just some guys on the internet talking about how to take advantage of opportunity. So if you're looking for financial advice, you can go to the guys that supposedly know what they're talking about. Anyways, let's go ahead and take a look at the price action here and see what we have going on. And if you have been following us any length of time, you will know really quick what I'm going to say today, which basically is we did not trade. And the reason why is right here. You have the 200 coming down on the 15. You have the 21 coming up. They're coming together. The biggest thing, though, is price action. So when price action is in between these two lines, it is a no trade zone. It's like a big battlefield, right? You don't want to be the guy running in the middle. You got guys on each side shooting at each other. You don't want to be stuck in the middle of that. So very easy to trade, right? So just like we were talking back on the other recaps, and you go back in the price action, you can see where it gave us the ability to take action. We came down and hit a nice key level on the market. We also hit that key level right through here in the evening of yesterday's trading. Went ahead and came down. We had some nice energy kick in right here, which is really good. Now, if you're going to trade up, those are the kind of stuff that you're looking for in this nice key area. You had this actually right here. You had this bottom right here, and then you had this area right here. So, hey, when you see that kind of stuff, you know, hey, here we go. But like I said, we are looking for strong opportunity. And in the end, this is what also held the market down. Now we have this pattern that's kind of forming right here. I already had this up pattern right here. So this could break up and get up in this area and get rejection, or it could go on up to this upper area. We also could start breaking down through here and go on back down and start testing this lower area also. So really we're on Friday. Yeah, we're in the weekend now. You always know what we like to do on the weekend is go have fun, relax. It's the weekend. Go and enjoy yourself. The markets are doing the same thing. There's going to be some low-key energy going on. It may drop, it may go up, it may go down, but really in the end of the day, it's typically on a weekend. There's not a lot to do. So with all that drawn out, let's go ahead and go to some higher time frames real quick, and we'll take a look at that. Let's jump on out to the monthly candles and see what we have going on. You can see this nice candle just coming down, finding nice double bottom right through this area, possibly right here on this purple line, right? That's my daily breakout line. You can see how it's nice and strong right through there right now. Obviously, if we break out of there, we could be easily coming down into this lower area. And I'm not saying it's going to go down here, but there's a nice golden pocket sitting down here. And it's pretty ugly, right? So you're talking at 38,000. Yow. I mean, that'll shake some people. 57,000 is another target. Now, this is your bigger area that we were looking at. This is kind of the bottom of the market in the 2022 and how we ran on up to the top here in 25. So are we going to come back down and get some retracement? We could come back down there. So don't get too like that's never going to happen. I wouldn't say that right now. I'm not going to say anything that couldn't happen. Really, we're just looking at levels. So a 0.5 retracement here on the monthly is sitting right here at that 70,000. We could easily run down in here into that 786. Which would be around that 56,000. So, hey, those are both on the table. And then are we really going to get down here? Maybe, but 38,000. Now, those are just areas that I'm looking for to get down to. So let's start looking at the monthly. Obviously, you have the monthly's 200, or the weekly, sorry, you have the weekly 200 coming up. Right now, we're in between those two. So we are sitting in a neutral state on the weekly. Now, if you were trading the weekly, that would tell you that you're neutral. Amazing. The daily, though, looking at the daily, we are still rolling over nice and aggressive, nice and looks really good. We're kind of coming back down in these key areas. Again, you have these areas I've been talking about. Let's watch this. We have been bottomed out on the stoaches. Let's go ahead and see if we can start getting a rotation. Today, in the last 2 days or so, we've had some nice extension down on the RSI. We are starting to finally get that slow moving average, that yellow line. We're finally going to get this to crash out through. That's a good sign. That's good. We do like that. Let's go ahead and get that down in that area. And let's start seeing this recovery start happening if we're going to get it. I know there's a lot of negativity out there, guys. Doom and gloom. This is why you need to learn how to read price action and really start to get good at understanding what's going on, because don't let somebody else scare you out of making decisions. So are being smart in the market, because a lot of people that are telling you to run are also people telling themselves that they're going to buy. Really simple. We've looked at this before, but if you're going to go look at the fear and deed index, this is historical, which is kind of neat. Actually, let's look at this real fast. This is 2011, 2025. You can see right through here is a up to 20. Anything below is the extreme fear. As you can see, this went all the way back to 2020 right here on this chart, because we're on a 5-year period. We could go back all the way back. So this is 2011. You can see that we come down here, and a lot of times when it gets down here, it doesn't like to stay, right? It gets down here and poof, comes down. We'll go back out of there. Boom, goes up. Boom, goes up. And here we are right now. Have we turned and gone up yet? No. But when we do, what's probably going to do? Boom, go up. So pretty exciting, actually. This is the time to accumulate. People are always like, oh, I want to buy with so much cheaper. And here you are. It's so much cheaper. Here's some statistics here on just this chart right here on where things kind of sit. Days below 10 is 128 days. So there's been some time that it's been kind of down there for a little bit. And that's why it has this little winter signal. Winter, yeah. Right? Winter's cold, no fun. So this is also like the greed and the energy. How many times it's been in those areas, neutral, the fear, the extreme fear, it's only been there for 15%. So it's telling you when it gets down here, it's not going to stay down here very much longer, guys. I'm not going to give any timestamps on it, because that's not how I do trading either. All I do is just look at the possibility of future growth and development. And I know when this happens, it's time to start paying attention, start getting that dry powder out, start doing small investments. And I say small investments, doesn't mean you go crazy. It's always easier to get back in when the market is going back this way. I'd put a little bit in. If it comes down here, put a little more in. Comes down here, put a little more in, right? I've already actually been doing this. So really, when we start to go back up and I still have more to put in, I'll probably get a little more aggressive putting it in on the way back up, because the probability of it going up and breaking out is a lot higher than it keep going down. So that's just the ease of trading. Everybody loves to call the bottom. I'm not going to call the bottom. I don't know where it is anymore than anybody else. But if this is the bottom, I'm already happy with everything that I've added in this last little bit of drop. If you see red on the screen, it's time to buy. Bloodbath, it's time to take advantage of it and get some cheap pricing. So and when I say cheap, it could go even cheaper. So always make sure you have some dry powder on the side to keep adding in whenever you see fit. Once this daily gets back up into this area, then we're going to get neutral, gets above that 200 like I've talked about. Boom, boom, boom. We're headed back up on this 4 hour. The same thing with the 1 hour. We're already back above its 21. So right now we're sitting in a neutral state. Let's see if we can get this to rotate, which we didn't know the 4 and the daily and everything else to start that trend. But really, we're still waiting on that 15 also. So again, when I started this recap, it was very simple. All we have to do is get above this yellow moving average to get us bullish. If it stays below like it is right now, we're going to stay bearish, and we'll kind of see how things hash out, and we'll take some advantage of the market next week. So guys, have a great weekend, and we will be talking to you very soon.